Hello and welcome to the presentation on finance for 18th of June 2024. I think this is my first presentation of this type, but it is the reason for making this presentation is that there are some news items going on which I think are important to understand so that people who are related to the field might need to know what's going on, those people who are related to finance and economics, or those people who are doing business. The other people, for them, it's not such a big deal. Anyway, here's what's happening. There was a deal signed in 8 June 1974, and it expired nowadays, supposedly in the media. I have not been able to see the actual deal. So sometimes it says 70 years, so it's 50 years. So maybe the deal was done for 50 years. I just found a reference to the deal in this New York Times article that's available here. I did not go through this because I didn't want to spend time on it. But I'm assuming that there was a deal, and I don't know the text of the actual deal. But when you're doing business, it's important to, if you are serious about it, before you make any decisions, make sure you get actual details, if you can, on the deal itself to make sure that this information and what the media is saying is true. Secondly, the media is saying that Saudi Arabia is not renewing the deal. That does not mean it is not going to renew the deal. It could be renewed for if they change their mind or something. So you have to be aware of that. Okay, now there is a term called the petrodollar. It means if you want to sell oil, which is basically Saudi oil, and because of this deal, the petrodollar concept was created. That means if you wanted to buy oil from Saudi Arabia, which was one of the largest suppliers of oil in the world, then you had to get a dollar to buy it. And by dollar, I mean the currency which is used as a token. So you have to actually go to the, like if a token is being used as at the cafeteria to buy food, you have to go to the cashier, pay them the cash. They'll give you a token, and then you can get the food item based on the token you bought. Similarly, the US dollar currency was being used to buy oil for 50 years. If it continues or not, that depends. But if it does not continue, the value of the token will go down because a lot of the amount of tokens were bought because people wanted to buy oil, which is important for their economy. In the 1970s, somebody made a correlation between the amount of energy used by countries and their GDP. And the correlation was positive. That means the more the energy a country used up, the more its economy grew. So in the 70s, what happened is countries like the US, they did deals like these. They said, we're going to buy your oil, and or force other countries to buy oil with their currency, so that if some other country wants oil, they have to pay the US government and help boost up their economy by buying US currency, which was printed only by the US. Now there's a difference between the issuer of the USD tokens, the US currency, is actually the Federal Reserve. There's a difference between the Federal Reserve and the US government. So people might think that the US government is actually the issuer of these tokens. It's not. Federal Reserve is a private bank. This information I've learned from some documentaries or YouTube videos, which you can look up and see if you want. If this information is wrong, do tell me. I would like to know. This new development means that the world shall not be favoring the Federal Reserve. So directly the main, like how these days, they say beneficial owner of a company. They want to know that. The financial institutes and the governments these days, they're always saying, like, especially the US government, there's like, if you're doing business, they'll say, who is the beneficial owner behind this? So the Federal Reserve is the beneficial owner of USD tokens. And therefore, for 50 years, a lot of the oil in the world that was sold, it benefited the Federal Reserve, which is a private bank. Okay, now if this renewal is not done, then the Federal Reserve loses power. Whoever is behind this, I'm not sure why they want the Federal Reserve to lose power. Now, the thing is, Now, there placed sanctions on countries like Russia and other countries. If they're placed by the US, the result is these countries shall come up with other arrangements, because if they cannot, they have restrictions on business and restrictions on banking, then because of the necessity is the mother of invention, that's why things are coming. I mean, other alternative stuff is being created. So whoever is coming up with these ideas of sanctions is either clueless as to the loss of power, or they're showing an attitude as to, basically, the Federal Reserve will be losing power if these sanctions are created and the business shifts away from the USD token. Now, either the people who are in power and they want this to happen, or they're clueless as to what is causing it. So either it's because of their attitude, they think that nothing is going to happen, or they want it to happen. So I don't know what the actual reason is for this. China and Russia and India shall benefit because they deal in oil and they will be able to save a few percent. So not much of a difference, but overall the global economy just a few percent difference. But for the Federal Reserve, it's a huge amount because there's their main business. So I call it the overhead tax. That means a few extra percent that has to be paid to buy US dollars and then trade the oil. Then that was the tax that was being made for 50 years. So from the global economics point of view, not a big deal. But for the USD Federal Reserve owners or the issuers, that's a big thing. Then there's talk about CBDCs. These are central bank digital currencies. I think there will be multiple talks about this. As long as central bank means controlled by the central bank, so it's not much. A CBDC is totally different from. It's very similar to the currency itself. However, CBDCs are not likely to be, even if they're introduced initially, people will start using them just like they do IPOs. But in the long run, they'll notice that the currency, the paper currency, is more anonymous if they want easier transactions. The paper currency has no questions asked, nothing. And it's also given by the central banks. But the CBDCs are a digital currency, which means they're in a ledger. So if somebody wants to monitor them, it's much easier to monitor what people are doing with the digital currency than with the paper currency. So people who don't want monitoring, they will prefer the paper currencies and they will avoid the CBDCs. And those who want less monitoring, they might also choose the common digital currencies, which are not the central bank currencies. Okay? Even if digital currencies were not created, there are other forms of transactions like digital wallets, which could have been used, and those methods are also, in the future they might be used for a lot of other transactions. So the issue is, why are digital currencies going to be more popular? Because the banks are expensive and the rates for transactions, especially cross-border transactions, are very high. And then these days, banks are asking a lot about KYC and anti-money laundering, and they're even asking strange questions like, what are you going to do with are you going to buy it for groceries, or are you going to pay for insurance? So they're asking reasons for transactions. This is going to piss off a lot of people. These nosy questions will piss off a lot of customers. Even the customers who pay taxes and are they have white money, they might still prefer to avoid these transactions, so they will gravitate towards digital methods, and even if they have nothing to hide, just because of these useless questions. And I don't see who came up with this idea of why these banks need to ask these questions, but it's actually going to irritate the users. It's already irritating them, but it's more likely to irritate even more. Then once that they start shifting towards other methods like wallets and digital currencies, banks and regulators shall complain about the other options being available, and they will not realize that their own customers globally always had paper currencies, which are the most anonymous methods available. And they shall look clueless. I'm talking about the banks. They will look clueless when they're talking about people not using their services to do transactions. But what the central banks will not notice is they are using their currencies as much as they want. But if a lot of questions and useless questions are asked, they will shift to digital currencies, which are not CBDCs. Okay, so the world economy won't change much, but the value of the tokens for the central banks and these currencies, as more people shift towards digital currencies, the central bank currencies will go down in value because they're not going to be used as much. The value lost will depend on how much of a pain the banks create. I mean, one, their value is going down. People are using it less and less as they get more digital currencies shifted. Secondly, during this time, the banks have started asking useless questions, which will increase the speed at which people will start shifting towards digital currencies. The global trade will increase because if users shift to other easier to use formal currencies that have no questions asked, so they'll be more comfortable doing trading with that. So the trade might increase. But the media is most likely going to be reporting losses of the noise that the central banks are making because their stuff is gone. Their tokens are going to be used less, and the digital currency tokens will be used more. And by tokens, I mean digital currencies. If people start using tokens, they will have to be told that tokens are dangerous because the issuer could run away at any time, like a Ponzi scheme. Okay, so there's another thing about market capitalization. As the currencies go down, for example, today it is $2.41 trillion. I'll just check this. This is what it looks like. It says $2.41 trillion. And this is usually measured in USD, but not in commodity terms like grams of gold, silver, or wheat. So this, as the USD value goes down, this number could be going up for two reasons. One, the market capitalization of people are actually buying more currencies and actually converting other currencies into digital currencies, or just because they might be going down or be static, and this number will go up just because the valuation of the USD is going down as compared to the other currencies, which are digital currencies. So you have to be sure of what's going on. So it's harder to calculate the actual, whether it's going up or down, but generally people are shifting. To get the real picture, you have to do the calculations like how CPI is done. That means you have to convert, you have to look at the price of the commodities like wheat, rice, oil, gold, silver, and then compare them to the currencies to get the actual. If the price of these commodities is going up in terms of a currency, that means that currency is devaluing. You can assume that all of these commodities generally stay at the same value. They don't fluctuate a lot. But if you combine them, you will get a basket of commodities which you can then calculate the currency value. If the currency is going down, or all currencies are going down in value compared to the commodities, that means the currencies are being devalued. If they stay stable, then it means the currency's money supply is not increasing and it is static. There are very few central bank currencies that actually increase in value. That would be the case where the central bank is actually reducing the money supply. But that is usually not the case. Most of them, they will depreciate over the long run because banks want to just print more money for nothing. And when they print money for nothing, they actually create inflation, and that is a tax on the poor people for all countries, whichever country or currency is being devalued. Okay, once you do this comparison, then you will know whether the amount of resources being invested into a currency is going up or down. So generally digital currencies are going to be, you might notice that digital currencies are increasing in the amount of commodity values that are going into them, and their market capitalization in terms of commodity value is going up, while the other currencies, the commodity value might be going down. To explain this, I looked up this link, which was from the 2020s. Then during this thing, it actually is a depiction of different values. So every this square block is 100 billion. this one, every square is worth $100 billion. That is 100 billion USD. So in the 2020s, it takes this picture. But then I noticed the cryptocurrencies in 2020, it says 244 billion. Now it's 10 times, like 2.4 trillion. So over these 4 years, this cryptocurrency has gone up by 10 times. And if you can assume that the US dollar did not drop in value by 10 times, that is what I mean by the commodity value of cryptocurrencies, and the amount invested in cryptocurrencies is increasing. While if it is increasing, that means people are reducing their other common currencies. So this is the gold, which is like 10 trillion, no problem. Fortune 500 is market capitalization, you can see. So you have 89 trillion in some shares. The global debt, that's the government debt, which is 253 trillion, no problem. Now here's an important number. And the global real estate was 280 trillion. That means, and half of the assets are in real estate. So if you double it, you will get the world economy. So the world economy in 2020 was 580 trillion. In real terms, that means 580 trillion was the actual economy size, because you have to double the real estate value to get all the investments. Now, what I notice the problem is, you've got this thing called derivatives. The stuff on the table that they're playing with is 11 trillion, which is not much compared to the 500 trillion or 580 trillion of the world economy. So it's quite a small amount. But their value, I mean, the betting that they're doing is 500 trillion to a quadrillion, which is 1,000 trillion. So the betting odds are 1 to 50 to all the way to 1 to 100. So if this derivative market valuations goes down by 2% downwards, this 11.6 trillion that they're betting it on, they're hedging it, is going to be eliminated almost immediately. If it keeps going up due to the printing of money, fine. And if you're looking at it in US dollars, everybody's happy, that's okay. As long as they can keep pulling that off and the banks can keep showing a higher value in terms of currency, people will be fooled into thinking that this is actually going up, which is not. But as soon as the whole market decides they want to pull out, they pull out by 2%, this 11 trillion is gone. That'll make this, when this does happen, only the companies that are betting so much in the derivatives, those companies will be eliminated, just like the CDO example of the 2007s or 2008. To understand how this betting was done, in the CDO times, the synthetic CDOs, you can see the movie in there, it's mentioned that it was something overvalued at 20 times. So compared to those times, now it's been like something like 10, 15 years from there, and now the overvaluation is 50 to 100 times. So there will be a bigger bang now compared to the CDO bang. Then we have this news item from 10 June 2024. Putin is saying we have to come up with our own payment system, and this is the basic point is the system would be unmoved by political pressure, abuse, and external sanctions. That means those who have a hidden agenda, it'll be more open. Those with a hidden agenda will not be able to push the banking system as much. This news item is here, and that's about it. Oh, by the way, to understand this part of this betting odds, there is a video, there's a movie called The Big Short. Inside that there is a scene by Selena Gomez explaining the CDOs. You can go to YouTube and find it, or you'll have to get the whole movie to get that. You can watch that to understand how the overvaluation and betting works for CDOs or derivatives. And this is our contact we've got lots of useless information. I mean, we have lots of useful services. These are the two websites, and if you want to know directly, you can email me at khawar@atrc.net.pk. So if you'd like to know about services which are useful for businesses, you can talk to us. And thank you for taking the time to see this presentation. If something is not clear, you can provide feedback. We can actually edit and update the video to explain it better. And tell me what you liked, what you did not like, or what you understood, what you did not understand as feedback. Thank you.